It's no secret. Intel stock is down 48% in the last 2 years, while NVIDIA stock is up 114% in the same 2 years. Intel potentially has a new spinoff to try to compete with NVIDIA. So we're going to go take a look into whether Intel has the possibility of regaining the #1 company with chips with this new spinoff. So your Uncle Paul and Mo is going to take a look at the stock, look at the news, look at analyst estimates, 8 pillars. Let's go take a look at it right now. So Intel stock, and by the way, full disclosure, I own Intel stock. Do not buy it just because I have it. This is a long-term turnaround play, and I'm buying it for my reasons, but I'm going to go through the company with you. And again, we're here to teach a process, not give you fish and say, go buy this. We're trying to teach you this is the way we look at the company, and you probably will disagree with us, and that's okay. We want free thinking here. We want you to have a good process that you can apply to other companies. So, Intel, $140 billion market cap. Guys, keep in mind, one thing I want to show about Intel. This is the max chart for Intel. Back in 2000, this was the company along with Cisco. They hit an all-time high in August of 2000 of $75.81. Guess what? They've never seen that price since. 23 years later. Now you might sit there and say, well, yeah, the company's died. Mo, do you think the company's died?
I would venture to say no.
So last year they did $54 billion in revenue.
Okay.
In the year they had $75 a share.
Yeah.
They did $31 billion in revenue.
I think they did more last year.
So they did more last year.
They
did
profit?
$9.4 billion. I think the profits can be skewed, but $9.4 billion in 2000. And in the time frame since then, they hit a peak of $24 billion in profit.
Wow.
So if I told you back in 2000, the company's going to have more revenue 23 years from now, and along that way, they would triple their profit, you'd have said, oh, this company's going to kill it.
$500 a share, $400 a share.
Why? Because in the short run, stocks are a voting machine, as you can see right here. But in the long run, they're a weighing machine. What that means is, in the short run, whatever's popular is going to go up, whatever's unpopular is going to go down.
Even in the tech boom of 2019, 20, 21, still didn't get there.
There's a very negative feeling around Intel.
Yeah.
Similar to what it was with Microsoft 10, 11 years ago when I was saying this company, now Microsoft was better because they had growing revenue and growing profit. And Intel, just like everybody else, had a lot of cut to their revenue and profit. But can they turn it around? They're investing in major chip plants, including one just an hour and a half away from our studio in Columbus, Ohio, $20 billion, like 1,700 acre factory. So hopefully, and their foundry. The foundry means they can build chips for other people. I said chips. All right.
They might build chips.
Let's check out some other things. Their dividend is down a lot, 3.4%. It used to be much higher. Next year, it's going to be even lower, 1.4%. Their free cash flow in the last 5 years is average $6.7 billion. Last year was negative because of all this investment they're making back in the company. Okay. Gross profit, 38%, 5-year average margin of 22.6% profit margin. So this is kind of saying, guys, if we can get back to our growing self, what are we able to make in profit? Okay. The numbers are all going to look very, very bad here.
Yes.
Very, very bad. You know what I'm impressed with?
What?
How the return on invested capital is still so high, even though it's been a tough 2 or 3 years. Guys, this is absolutely a turnaround play. This company got as low as $25 in the last year, October 13th, literally a year ago to almost today, $24 per share. All right. Now, my basis is somewhere in the high 30s, mid 30s, because I've been buying all the way down from the high 40s. So I've seen almost a 50% drop at one point in my investment. And guess what? It's a long-term play. And if you're not able to see a stock you own go down that much, then, and I could very well be wrong on Intel. And a lot of people probably believe, Paul, you are wrong on Intel. More power to them. And that's why we're here to have this conversation. Okay, let's check out some news. Mo, tell us some news about this spinoff that's potential to compete with NVIDIA.
All right, so Intel is looking to unlock another source of funds from initial public offering. This has been big talk of the past couple of weeks. I've got a lot of people messaging me about this and saying, what do you think about this spinoff? They're going to try to take on NVIDIA. What do you think about it? So
companies will spin off portions of their business when they feel like the parts are worth more than the whole.
They can unlock some value?
Yeah, they sit there and say, listen, our company overall might be dragged down by a few divisions, but there are other divisions that are doing very, very well. Why don't we spin them off, get some capital in that could help us on the other businesses and do this?
So they're preparing an IPO of Programmable Solutions Group in the next 2 to 3 years. The company said it would improve performance of the unit, open up to outside investment, and give Intel a boost. So it's going to be worth around $16 billion.
Based on normalized revenue of $2 billion.
Okay.
All right, so guys,
so we'll see what happens, but
programmable chip solutions, that's the AI way, and that's their way of saying NVIDIA, hey, yeah, you guys are the up and comer, you have been for a long time, but we're still Intel and we want to be able to fight here.
But again, 2 to 3 years. That just tells you it's even a really long-term play here.
Yeah, and you have to remember, not only you have to be different, you have to be right as well.
Yeah.
So to be successful investing, it's not just about being different, although it's very important. That's the most important part. But the next part is you got to be right. So I'm hoping I'm right on this one. Okay, what other news you got on Intel? Mo?
So Intel's new fab in Ireland begins high-volume production of its Intel 4 technology.
Should I go there and get a tour during my wedding next year?
Actually, a pretty good idea.
Hey, Lisa, we're going to take an Intel factory tour when we're in Ireland.
A lot of stuff is happening in Ireland as far as like tech and drug companies, et cetera.
Well, isn't there very favorable tax laws there?
There were. That could be changing soon, but there are, but that could be changing soon.
Okay.
Shocker.
Intel
announces intent to operate. Here it is.
A standalone business under leadership of Sandra Rivera. All right.
So January, let's see, expected to begin January 1st, 2024. All right.
That's for the standalone operation.
Standalone. Yep.
Okay.
All righty.
All right. So what are some bull and bear cases in our community, guys? We love going to our community to get bull and bear cases from everybody to tell us what they think of Intel. So let's hear it.
Our boy XILP Value again. New CEO and management team was, as old as fraudulent? Okay. The new CEO is chief engineer of some of his best products. Isn't it Pat Gelsinger?
Yeah.
I don't know.
He's focused on profits.
Yeah,
good.
That is good. Intel is still somewhat dominant player in the semiconductor industry with a decent brand. I think it's much more than a decent brand.
Yeah, I think it's much better. And by the way, the focus on profits, I want them to focus on long-term profits.
And I think that's what Gelsinger's doing. He is not focused on profit right now. It is very
clearly
clear.
not, because
very
we see
clear.
a negative $1 billion in profit and free cash flow of a negative $16 billion.
And going to build a foundry in Ohio and then something else in Arizona and something else in there's no focus on profit there.
Yeah, the money is like, hey, listen, we're here for the long run. You know what's similar to?
No focus on short-term profit.
That's the thing. It's similar to when we buy apartments. We don't ever care about the first 2 or 3 years of cash flow. We're sitting there pumping money into it to make the revenue and profit much, much higher. That way, when we're done, we see 2 or 3 times the profit. That's the big key. What else you got?
Intel has a lot of competition.
That's a bear.
Yeah. The company has struggled to execute its manufacturing
strategy.
strategy.
That is very true.
Yeah. Intel's margins are under pressure. No surprise there, though. I think
but I'm actually kind of surprised by how their margins, their gross margins before their fall was like low to mid 40%. Now they're at the high 30s, which is still a big drop, don't get me wrong, but I thought it'd been much lower than that. It seems very active.
Intel is a crucial part.
Critical.
Critical.
Do you have a hard time reading?
Yeah,
I always see you read stuff. I'm like, where did you get that word from?
Because I'm trying to do like multiple things here at one time.
Okay, Intel is of critical importance in the geostrategic priorities of the USA.
Uh-huh.
That's it.
Go on.
Look how hard that is. America needs Intel to succeed, and Intel is hard at work. I don't agree with that. I don't think America needs Intel to succeed.
I don't think so either. Intel can go away, and it's not going to be an issue.
Yeah, I don't believe that. But at the same point, it'd be nice if Intel did work. It's a major manufacturer of chips. I think the only major one in the U.S. or very high up there.
Mm-hmm.
Okay, go ahead.
Great name, Lib. In terms of processor, CPU, they are the best non-gaming producer of CPU, have a great reputation. Only really 2 CPU manufacturers in the industry, AMD and Intel. Okay. Intel does graphics cards? I didn't know that.
Of course.
I didn't know that. Generally
Why would they not?
Received now. I thought that, because I haven't heard that there's big competition between Intel and NVIDIA until like right now.
Okay.
Yeah. All right. Looking to spin off its PSG. Not everything will need chips that are 5 nanometers, and Intel is close to catching up.
These are more specific. These are more in the grain ones, guys. I think for myself, what I want to focus on is, is Intel a business that is dying and going away? Well, let's look at the 8 pillars first off. Look how ugly this is. Guys, we always say about the 8 pillars, they tell a story. The story here is net income's down a lot, revenue is down a lot, free cash flow is down a lot. Okay, a lot of big stuff here. A lot of big stuff. 5-year PE is low. 5-year price of free cash flow is low. Why? Because they're losing, the stock is down a ton, and they're losing, their cash flow difference is down, so it hasn't caught up yet. I imagine this number will get worse as time goes on, as Intel catches up. This is, I will repeat till I'm blue in the face, a turnaround play. If you believe that last 1 year of revenue and profit were the worst they're going to see for the foreseeable future, it's something to take a look at. Let's go see what analysts are saying about it. So look at analysts. They have 63 cents for profit this year per share, going to 4.24 in 2027. That would make it less than 9 times profit for 2027. Now, these are analysts. They have their biases just like we do, okay? Revenue, they have record revenue coming to Intel here in the next 3 or 4 years.
They're basically saying they're going to hit on everything.
Is that possible? Sure. Is it probable? I don't know. But these are the things we have to sit there. I'm going to look at Intel and say, okay, if these investments don't work out, but they're able to at least get back to the point of profit and cash flow, which they're investing a lot of free cash flow in the last few years. So that's understandable that their free cash flow will rebound, as in they don't build these factories anymore as much. What's in your mind, Mo? You're looking at something.
No, I was just looking at when I did Stock Analyzer last.
Gotcha. All right, so these are the things. Again, analysts have their biases, so who knows? And the further out they go, they have no idea what's going to happen here, right? Oh. I'm actually surprised it's this high up for 2027.
There's so many. Like you see some of them where it's just 2023, 24, 25, and it stops. I can't believe it.
Well, Intel's a big company, $150 billion market cap. It's going to garner a lot of attention.
Yeah.
Right? All right.
There's a lot of unknowns.
The next question is, what's the price they pay for the company? Now, guys, this, along with our other tools, are a part of our community. You've heard me talk about our community and our software. And what I want you to do is to take a look at it. Now, I'm not asking you to make a yes or no decision right here, right now. What I'm asking you to do is to make an informed decision. And you cannot possibly make a fully informed decision on the outside. You got to be on the inside. Just like if you're buying a car, you take it for a test drive, you feel it, you make sure you like the car. But instead, here, we're giving you a 7-day full access free test drive. And at any point along the way, you can then sign up. If you choose not to sign up, no harm, no foul, not the right place for you. Continue watching our videos, and sometime in the future, I'm sure you'll see the value as it gets more and more expensive. So guys, go to everythingmoney.com, sign up now for the 7-day full access free trial. Thank you very much. So the last time I did Intel, when was yours, Mo?
Is it August? August 22nd.
Same with mine. Yeah. August 22nd. We probably did a video back then.
Probably.
All right. What were your revenue growth assumptions on Intel?
3, 7, and 11.
Okay, I did 3, 6, and 11.
Okay.
I wonder why I jumped it up so high. But all right, profit margin, what'd you do?
I did 18, 22, and 26.
Same with me. So we're so far check marks on both. Free cash flow margin?
Same numbers, 18, 22, 26.
Yeah, because the reason being, guys, is before their big drop in free cash flow because of their factories, they were actually pretty consistent on their free cash flow to earnings number. So I think that once they stop building these factories, that'll stabilize. Now, PE and price of free cash flow. Mo, what'd you put in?
13, 16, and 20.
So did I. 13, 16, and 20 for both of them. Now, for desired annual return, I'm actually surprised by this.
So I had those numbers, 10, 13, 17, but I switched it.
What'd you do?
12, 15, 18.
I knew you were going to go higher. So guys, this is your margin of safety. You can get 9 or 10% from investing in a long-term ETF. So here, I'd always recommend people, depending on where you are, the kind of company, put higher numbers. Now, I made very low assumptions here on the low side. So I'm okay with a 10% return if these numbers occur. And as I go higher in my assumptions, I'm going to make a higher return requirement. I'm still comfortable with 10, 13, and 17%. Mo went higher, fully within his right. Now, guys, we hit the analyze button. Now, I just need you for 1 or 2 more minutes as we explain these numbers, because remember, I'm here to teach a process. It's not just saying, go buy this company. If you like the numbers, go do more research, dig in deeper, join our community where people are talking about Intel with that free 7-day trial. Boom. I have a low price of 30, a high price of 63, and a middle price of 42. If I bought at today's price and the low assumptions occur, I'm going to make about 7.9%, Middle assumptions occur 15.7. High assumptions occur 26% return. Mo, what'd you get?
About the same numbers, 27 on the low, 59 on the high, 40 on the middle.
I have my watch list at $30. So when it hits there, I'll get notified because I already have a position. I'm just trying to buy cheaper and cheaper shares. Guys, everythingmoney.com. Sign up for the community. You won't regret it. 7-day trial. Take care.